Good evening, ladies and gentlemen. Welcome to Ask Great, episode 25. We have been doing this for the past 25 weeks, which is fantastic. Today we have Dulip Jayakodi. Hey, Dulip, what is happening?
We're still in lockdown, Naveen, but I think even though we are, the property market hasn't slowed down, as we all know. So that's
right.
For us. So.
Right. So as always, we'll be answering the questions we get from investors on a weekly basis so that it can add some value to you. And these are all useful questions. Every question is a good question. Dulip, what have you got?
I mean, we've got a few questions for today, which are quite valuable, and I think they'll be useful to a lot of people. The first question we have is that how soon should I pay my home loan?
Yeah, so your home, the home you're living in, is the debt you have on that is bad debt. And if you have investment properties and if you have debt on those are good debt. Why I say that is your investment properties the mortgage of the investment properties are paid by the investors or the tenants, whereas your home, you're paying your mortgage. So which means you have to pay your mortgage down or smash it as soon as you can. And there are certain strategies which you can use to get your home loan down. So to answer that question, as soon as you can. I mean, just to give an example, if you have a home loan of about $450,000, if you keep on paying that for 30 years, you'll end up paying over $900,000. That's almost double or more than double. So sooner the better. And we can definitely help you with some strategies to get that home loan down.
So talking about strategies, Naveen, someone's coming up with a question about what strategies can I use to reduce my home loan quickly, pay it off quickly? What can we tell them?
Yeah, so that's a good question. There's few things that you can do. Number one is you can have an offset account rather than keeping your money or savings in a transaction or a savings account. Because as you know, you get real peanuts for having a savings account these days. You get barely anything out of it. If you have savings, always keep that in the offset account. Every dollar you have, you should be keeping in the offset account, which means if you don't have an offset account, you should get your banker or your broker to get that created for you, because that will really help to get your mortgage down. To give you an example from the same one we did last time, if you have a loan of $450,000, if you have even $25,000 in your offset account, you get charged interest only for $425. So when you compound that over a long period of time, you're going to get a massive benefit to pay your home loan faster. So that's number one. Number two is you can set up your mortgage payments on a fortnightly basis. We have 52 weeks a year. And if you do that, the calculation wise, on a 30-year home loan, if you just by making it fortnightly, you can save about 5 years on your mortgage. It's a very little tweak which you have to do by speaking to the bankers, but that will have a huge benefit in the long term. Number three is you need to put some extra cash onto your mortgage. If you can put about $500 at least every single month, you compound that over a period of time. The same example, $450,000 loan, you can save about 16 years by just paying $500 extra. Now, some might say, I don't have extra funds to put in, but again, there's more strategies to use where you can invest, and then there are certain things which you can do. So, but if you can put some effort to put some extra money, that's the third strategy. So we have three strategies. One is fortnightly payments. Two, the offset account. Number three, putting extra cash. So these are get your mortgage on your own home down faster.
So Naveen, this is a question that's recently we've been getting from a lot of people who are entering into the property market. They haven't got much experience in the area. They're telling me, can you please let me know how I can get into the property investment? How I can get into property investment as an amateur? So these are coming from people who's got lack of experience in that investment.
Yeah.
What can we tell them?
Yeah, no, yeah, that's a fair question. So again, so some of the problems as a first-time investor you might have is, I don't have the required deposit, or I don't know what to do. So if you have your own home and if you have a mortgage against that, you might not know, but you might have some equity in it. You might have bought a property for 500,000, but if you value that, it might be 650 or 700,000 right now. So you do have some equity there where you can take 80% out, and you can use that towards your investment property. And that's one way you can take cash out of your property to pay for your investment property. And then if someone has the money and then they don't know what to do, again, that's where the advisory piece comes into play. So it's all about the location. It's all about what your objectives are and picking the right property at the right location. And yeah, it's not rocket science. I mean, you need to do your due diligence. Location matters a lot, but you need to check the resale values of similar properties, how soon you can sell them, how soon you can rent them, what sort of rental returns you can expect. Once you study that, it's a matter of picking the right property, and you just have to step into it and lean into it. And once you start the first one, second, third, fourth, fifth is going to be easier and easier.
Thank you. All right. We have a question again. I want to have a passive income of $100,000. How can I achieve it? Very good question, I thought.
Yeah, brilliant question. Yeah, that's a very good goal to have. And okay, let's take a scenario. Let's say you have a property and it's that's your own home. You have a mortgage on it. Let's say your mortgage is 450,000. Property is worth 650,000. So you have some equity on it. You can buy the first property, and ideally it should be a cash flow positive property where you can get at least $500 extra in your pocket. What you do is you take that $500 out of your investment property, which is cash flow positive, pay off your own home. You put every single dollar into that. And then you might take some more cash, buy the second property, third property, fourth property. So if you have about 4 properties, what you need to do is you need to pay off each property by property so that you have fully cashed out about 5 properties, which is cash flow positive. If you do that over a period of time, it might take about 10 years to 15 years based on how aggressive you do this. But if you use the cash flow positive from your investment properties to pay off your home loans and the investment property loans, you will end up with a portfolio which is totally cash, and all that money will be yours. So you can pretty much replace your income. It can be 100,000, it can be 150,000, depending on how aggressive you want to do it. But you can definitely achieve that, and we can certainly guide them how to do that.
So, Naveen, as we know, the demand for investment properties as real estate agents, we've found that has been increasing quite a bit. And a lot of people are obviously interested in the subject and wanting to know more. A common question that has come up here, it is, what should I look at when choosing an investment property? What are the things to look at?
Yeah, so things you need to look at is location matters a lot. Where is the property located? What are the amenities? How far is it to the shopping center? How far is it to the bus station? How far is it to the train station? Has it got a train station in the suburb? And more importantly, those things will matter for your renters or tenants and the rental income, and how easy it is to rent it out. So the location matters a lot. And from a capital growth point of view, you also need to look at what are the developments which are coming in that suburb. Are there any more commercial projects, any more railway stations, shopping centers, any infrastructure projects? happening. So that will add value to the suburb or the area, and that will drive the growth. So, and also in terms of statistics, you need to see in terms of the resale market, how long a property is on the market before it gets sold. So that will give an indication how easy it is to resell. And also you can also check some statistics about the rental, how long it will take typically to rent it out. If you know these statistics, the locations and the growth factors, and if they're all ticks, you simply cannot go wrong.
Excellent. Good answer. And also just a reminder to our people tuning into this chat right now, and also who are seeing this later on after this live feed, that you're welcome to sort of ask your questions as comments in this post, and we will pick them up either now or later on in the next sessions that the Ask Grid sessions that we're having.
For sure.
Now, another good question: what's the benefit of buying a brand new property versus an old property? We get this question quite a lot.
Yeah, there's a lot of benefits. One is buying a brand new property. It is brand new, so as an investor, there's less headaches for you. There, in terms of maintenance, most of the appliances has warranties on it for a couple of years. The house itself will have warranties from 7 to 25 years or lifetime sometimes with some of the builders. And they'll give you a peace of mind, and that'll save you some costs in the long run. But the real benefits are that from your taxation, there'll be a whole lot of benefits. If someone is earning over $100,000, they might be paying over $30,000 of tax, which you will never see. But when you buy brand new properties, through depreciation of the property, you can claim back a lot of taxes. And that's a legal way of taking your taxes back if you have multiple investment properties. So you will definitely immediately have short-term benefits through your tax returns when you buy brand new properties. When you buy old properties, the depreciation, while you can claim, but it is quite low comparatively to brand new properties. And other point is, when you go to sell the property at some point, say you keep the property for 10 years, the property is only 10 years old when you sell it. Whereas if you buy a property of 15 years old, when you go to sell it, it's going to be 25 years old. So the sellability of your property will be much stronger, and the quality of the home will be much better when you buy brand new to start off with.
Fantastic. Someone's asking, my accountant said that I'm paying too much tax and advised me to buy an investment property. Will that really help?
That's it's funny because we get that question all the time, because people realize they need to buy investment properties when they go to the accountant to lodge the tax return. What the accountant has said is absolutely correct. If you're paying too much taxes, investment property is the only way, especially if you're working rather than being self-employed or having a business. That is the only way you can get some tax back. It sounds like this person is on a high income bracket. So if you're earning over 150 or 180,000, the tax man will take a whole bunch of your salary. So only way to get some taxes back would be to buy investment properties. And sounds like you really need to get onto it. And yeah, feel free to talk to us and we can guide you through it.
So someone's asking, can you tell us about the best option you have in Brisbane? I think this is somebody from Victoria. And tell me, what is the driver for buying property in Brisbane?
Okay, so before talking about the best option, let's talk about the drivers. So the main driver in Brisbane is Olympics is happening in 2032. And anywhere in the world, when there's Olympics happening in a city, the whole city will boom, and there's going to be a lot of infrastructure development projects, and the ripple effect would be the properties will rise as well. So it's a really good time. We have 10 plus years, and it's a really good time to get onto the Brisbane market if you have not already. And in terms of the best project, there's quite a number of good projects, but I think we really need to understand your requirements, what is important to you. You expect the capital appreciation, or you want cash flow positive properties. Brisbane is an area where it's very popular for dual key properties, where you get dual incomes, about at least $600 to $700 a week from property. So that's a good one. And then we have some really good projects in Southeast Queensland, which has some rental guarantees of about 5%, and the property prices are below 500,000. That's a really good project. And yeah, there's a whole number of options based on their requirements, but definitely we can help them with some options.
Fantastic. I mean, I think that's all the questions we have for today.
Right, let's see what we have on the page to see if we have anything else. Yeah, so there's one more. In terms of Brisbane, would you recommend investing in Gold Coast or Brisbane? Yeah, so the best place to invest right now in Queensland is Southeast Queensland, because that's where the growth is happening. A lot of infrastructure projects are happening. In between Gold Coast and Brisbane, half an hour to Brisbane, probably 40 minutes to Gold Coast. You get the best of both worlds, and more importantly, a lot of projects are going on. So that's a very good area to focus on. And yeah, in terms of projects, there's multiple projects, and we can definitely send you some options when you want to. Another project, why is the rental return high in Canberra? So that's spot on. Canberra rental returns are the highest in whole of Australia, looking at about 6 to 7%. And the reason for that is the income streams of people in Canberra are much higher than Victoria or New South Wales. You're looking at about $80,000 to $85,000 per annum as the average salary. So they have the affordability, and there's a shortage of apartments, especially where people want to live in. So the working class professionals, the students, you get the ANU, Canberra University, just to name a few. There's a very high demand in Canberra, and that's, if we're looking at cash flow positive properties, Canberra is another good option. Hope that has helped. All right, I think we always keep it quick, 15-20 minutes, and hope we added some value to you. Hope the questions and the answers were useful. And as Dulip said, feel free to send in your questions. We will take it on the next session and answer them for you.
Thank you.
Until we see you next week. Goodbye. Have a great weekend and stay safe.